You guys have all been lied to thinking you need this amazing psychology to be this amazing trader. And if the only way that you need to succeed or will succeed is if you have the mental side of trading down. That is a complete lie that these fake gurus will always tell you, along with their win rate and other innocuous facts that just don't matter. Why don't they matter? You need to learn how to be a wolf and not be the sheep that repeatedly go to slaughter. The reason psychology matters is not for your psychology. It's for understanding the repeated psychology of most people that are involved in the market. It's not about understanding your psychology. When you have the right system, when you have the right risk management system and the right strategy, they go hand in hand and eliminate any psychology. You should never be reacting to what's happening during the day. From 9:30 a.m. Eastern to 4 p.m. Eastern, you are just implementing your system. Oh, that happens, I do this. That happens, I do this. If-then statements and conditionals. Why is Robinhood free? Robinhood isn't technically free. They are selling your data to Citadel. Citadel is the person or the entity that is on the other side of your trades. They are the market maker or dealer. Now, they've created algorithms that prey upon the repeated psychology of investors and traders. You are the repeated psychology of most investors and most traders. When you think they know where your stop is, or they're always right at that level, and then they get you out of the trade on some stop run, and then it goes the direction that you were betting on. And you were right the whole time, but they get you out at the point where you felt something enough to make a move. That's because they know where most of you will have your stops placed. They know where most of you will get emotional. And they know this down to a science. This is not guesswork for them. It's guesswork for you guys when you're going to get emotional. They know 90% of you, 95% of you, every time will make this move, will feel this feeling that they, with intent, want you to feel. So instead of repeatedly being the school of fish that keeps continuously swimming in the shark's mouth and wondering why you keep dying, learn how to swim around the school of fish and start following the shark. It's literally that easy, but you have to take a second and examine what you're doing. Is it conscious or subconscious programming? Is it, oh, I'm missing, like when you see all these headlines coming out, we have interest rates coming out, we have wars, we have all these headlines that are trying to make you feel like good or bad or some underlying theme. Are they doing this with intent? Yes. If you think something and everyone else agrees with you, the first thing that should be going on in your head is, fuck. They all think this too. It's probably wrong. How am I wrong? Play devil's advocate. Play the other side of everything you think. When I'm in a trade and I'm watching it work and I keep thinking, wow, this could go up another $10 or something. I'm like, shit, everyone else is probably thinking that too. I should reevaluate and go through my system again to see what's changing. And almost every single time something is changing where I should be getting out of that trade sooner, because it's making me feel something that is by design. You don't need to understand your psychology only to the extent that you should never trust it. Like, you should always play the other side of it. But you need to understand other people's repeated psychology in the market. That's what's truly going to give you an edge. And everyone I've seen educating in this niche, all these fake gurus, they only understand trading psychology on the surface level. The fact that they need to talk about it. And that can be their fail-safe if their strategies and risk management systems don't work. Oh, your psychology was wrong. They understand it on the surface level. They don't actually get and give you guys the information you need to succeed. Because the matter of fact, the real truth behind it is psychology for you and your system doesn't matter. The only thing that matters is eliminating the way it can ever interfere with your strategy. Eliminating it entirely from ever interfering with your execution. Anyone who's actually worked on Wall Street, anyone who's actually traded on the sides of the desk that these guys have clearly never even seen. They might have interned for one summer as the coffee boy, but they've never been there. Not to the degree you need to actually understand this stuff. They just know they need to talk about it. But they talk about it all the wrong way. You don't need to understand your psychology. You need to understand the repeated psychology of most traders. You are that person right now. I'll have other videos going into that, but understand that their entire, the facade they create is all surface level understanding. None of them truly get that you don't need to understand it. You need to understand it enough to stop it from affecting the trading. You don't need to create entire, books about who you are and all this stuff. Just understand how to create a system that is completely devoid of any emotions. It's eliminating emotions entirely. That's not just putting a stop with a 2-to-1 RR. It's a system. It's a flow chart going through the beginning of you seeing the market, seeing certain opportunities, and if-then statements to get you from that initial entry, why you're entering it, how you're entering it, size, execution, management, trims or adds, all the way to exiting that trade, either for profit or for loss. It's not simple, just like a simple stop. That's not a system. That's the facade, or that's just the LARPing of a failed trader selling you a dream they could never accomplish. Stop consuming from people that talk about stuff like that in a kindergarten level way. Stop consuming from people that talk about win rate. Win rate doesn't matter. I could win 1% of the time and make $10,000 on my wins and lose $1 99% of the time, and I'm extremely profitable. It matters EV, expectancy value, and it matters if you're positive or negative in terms of your expectancy value. It matters if your risk management system is slamming the fucking table when it's positive and identifying where it's positive within that sample. Here's 3 things that you could do to first recognize and then implement better just habits to avoid being the repeated psychology of investors. Stop studying your psychology and study others. To truly understand other people's psychology, you should understand various theories, and a lot of these theories have been demonized by the ICT community and various communities on charting, technical analysis. I was taught Elliott wave theory. I will be posting some resources in the description of some great starter resources for Elliott wave theory. And it's not about using that theory to the price calculations and the actual calculations of where the price will go. It's understanding, again, the repeated psychology of investors. That theory talks about these 5-wave movements and 3-wave corrections that if you just understand the theory will really help you conceptualize markets. I'll briefly say it is fractal without getting too in the weeds on what Elliott wave theory is. Just think of it like a Russian teacup doll, like there's a move within a move within a move. You want to always be able to find this structure though, this 5-wave structure or this 3-wave correction to know what stage of the move you're in. So you always start at the top, these really large time frames and work your way down. That's truly going to give you a great understanding of structure. Secondly, be aware of what the overwhelming bias is on social. The only way I've ever used social media is looking at what people are generally thinking. Secondly, the second thing you can do to really be aware of this, again, repeated psychology of investors is what we care about, the psychology of most people. Be looking at social media. Look what people are generally going to be looking for confirmation bias on their wrong ideas, their wrong theory. The majority of people are mostly wrong. Understand that most people are not correct. If 90% of people are like, the market's going to go up tomorrow, you should be thinking the market's going to go down. If everyone's confirming your bias, you should be afraid of having that bias. Always be playing devil's advocate, taking the other side of what you feel after consuming. You're consuming so much information throughout the day. If you're connected to all these Twitters, stock twits, various groups, the news, block all of it out. You should cut all the noise out. Just use your strategy, your risk management system, maybe follow one trusted source, but you have to cut out the noise or it will become overwhelming. This won't be fun. It won't be enjoyable, and you'll lose money on top of that. It's stressful. You're letting the stress impact your decision making. It's a subconscious reaction to all this external information that you're just consuming. You're left with just you get paralyzed from all the information. You don't know what to do, and you inevitably will make the wrong choice. And lastly, understand what things and entities like market makers and dealers are doing with this information that they're getting from Robinhood, from all these free to trade softwares. What are they doing, and where are customers and dealers positioned? Now, this information is very hard to get your hands on without having models. It's very complicated models to basket every option order. This is information that we do provide, but start with the first two, work your way down. But understanding option positioning gives you an edge unlike anything else. It's a true blueprint or roadmap into the distribution of every possible outcome. If every possible outcome can be expressed on the option market and you have an understanding of how it's being expressed, it gives you a roadmap into future outcomes. Sometimes it's very overwhelming that we're extremely hedged or extremely one-sided on various outcomes or events. And it's very unlikely those outcomes come to fruition if everyone's positioned for them. That means we're all hedged. It's very hard for that outcome to occur. So without getting into the weeds with the last one, I want to make another video going into that and delving into that topic in more detail. Just start off by understanding market structure. You can start off with something like Elliott wave theory, and then go into understanding just how your mind works, just the phenomenon of that repeated psychology. What all this information, when you consume it, what is it doing to you? Is it helping you trade? Or is it making you overthink and remove yourself from your strategy? You can't have variables that are random like that influence something that can't be random in the equation of my execution or my trading strategy. It can't be like, oh, I'm going to consume this information that randomly happened and make a decision based on it. I don't watch FOMC. I don't look at data. I don't care what's going on. I execute my strategy every day. I don't care about that. It doesn't affect what I do. It's noise. It's all just noise. If my work is right, then it's going to be right. If I have the right strategy, if I have the right risk, then I just execute. All that other stuff is just noise and will overcomplicate any of your processes. I want to see if you guys understand this. Comment below if you understand why your psychology truly doesn't matter. Understanding how others think does, but I want to see if anyone can get this right in the comments. Thank you for tuning in. Justin, tuning out.